Omaha, Nebraska, the 1930s. A boy, just 11 years old. With a handful of saved coins, he bought the first stock of his life. It was a gamble. But in that moment, he realized something extraordinary. Money isn't just something you spend, it can grow if you understand the rules of the game. In college, he found a book, The Intelligent Investor. Inside it lay secrets, value investing, knowledge powerful enough to turn a few dollars into billions. A few years later, with only $100, he started a partnership. Then he took over a failing textile company and turned it into Berkshire Hathaway, now a global empire. His wealth? $150 billion. One of the richest men on earth. But here's the question. Did he always win? Or are there hidden failures behind the myth? At the center of that mystery lies the stock market. The stock market journey. To understand this mystery, we have to go back in time. Medieval Europe. Merchants gathered in courtyards, trading coins, debts, and goods. That was the seed. In the 1300s, in Bruges, Belgium, merchants met in front of the Van der Beers family house. From that name came the word Bourse, stock exchange. But the real revolution began in 1602, Amsterdam, the Dutch East India Company. Their business was dangerous, long voyages, pirates, wars. No single merchant could bear that risk alone, so they raised money from the public. For the first time, ordinary people could own a piece of something big, but they could also lose everything. The idea spread. London, 1698. Paris, 1724. And finally, America, 1792. Under a Buttonwood tree, 24 men signed an agreement. That was the birth of the New York Stock Exchange, today, the largest in the world. How the stock market works. Imagine you own a small fast food restaurant. It's successful. You borrow money from friends, open a few more branches. Still successful. But to open 100 branches, you'll need millions. So you go public. You sell shares to the public to raise capital. That's called an IPO, initial public offering. Sounds simple on paper. In reality, it's a complex machine. Investment bankers, prospectuses, regulations. All built around one key question. What is your company really worth? The price is driven by demand and supply. More buyers, price goes up. More sellers, it crashes. But the dark side, it doesn't always follow logic or earnings. It bends under news, rumors, politics, even lies. Think of Enron. Fake profits, forged reports. In the end, investors lost everything. Indexes, the illusion of stability. To measure the chaos, indexes were created. S&P 500, the 500 biggest US companies. Dow Jones, just 30, but the most influential. They seem stable, predictable, but remember, they're only numbers. They hide the fear and losses beneath. Why invest at all? So why take the risk? Because money today is worth less tomorrow. Inflation quietly eats it away. Savings accounts, safe but slow. Gold, secure but stagnant. Stocks? Here, you're not just saving, you're buying ownership of the future. That's what Buffett did. He bought undervalued companies, held them for decades, and let compound interest do the impossible. The dark side. Today, a new generation is diving into the market. Millions under 30 are trading stocks. Apps like Robinhood turned investing into a video game, zero fees, instant access. But with easy entry comes temptation. According to India's CB report, 91% of retail traders in F&O lose money. In the US, the CFTC confirms most futures traders fail. Why? Because they confuse investing with gambling. Patience replaced by greed, and when greed drives the market, a crash is just a matter of time. So the real question is, are you ready to make money work for you? Or will you follow the crowd, becoming food for a system built to take, not to give. The stock market has created billionaires and destroyed millions of lives. Which side will you choose? If you like this video, give it a thumbs up and share your thoughts in the comments. And if you enjoy deep financial storytelling like this, subscribe to the channel for more.